I'm Brian. If you're holding on to dollars, you could be losing money on a daily basis. What does that mean? It means essentially, if you've got dollars in your bank account that you receive through payroll, your job, your business, whatever it may be, they're losing purchasing power due to inflation. Things are getting more expensive. So what can you do? Well, there are alternatives. And that's what we discuss here every week. I call it the dollar is dead because there are alternatives like commodities and crypto and other things. So first, we're going to talk about the news, why it's relevant, and then get into what I look at every week on a week-to-week basis.
JP Morgan CEO Jamie Dimon is talking about a couple things here. It says that he predicted a major U.S. financial crisis. Now, why is he saying this? For two reasons. And they're somewhat related. Well, they are related, but he talks about a global market rebellion and its growing debt numbers being the U.S. So the U.S. public debt surpassed the 34 trillion mark. And this is in February 12th, 2024 was this article. And yes, the U.S. has gone past the 34 trillion mark. Let me show you this from the St. Louis Fed. You can see here that, and this only shows last year through 2023, it was at 33 trillion. But what I'd like to show here is look at this. From 2009, right after the GFC, it was around 11 trillion. So in 14 years, it went from 11 to 33 trillion. That is a substantial increase. Now you understand why the US dollar is losing value, because the US is in so much debt. And Jamie Dimon here is pointing out that yes, there's a lot of debt, and now the BRICS alliance, the BRICS economic alliance, and what is that? BRICS stands for Brazil, Russia, India, China, South Africa, and there are more. These are countries that want to decrease their reliance on the US dollar. Now, obviously, that's not great for the US dollar. He calls it a global market rebellion. So why am I pointing this out? Because he and Fed Chair Jerome Powell are discussing the trajectory of the U.S. economy. Powell said in an interview, speaking to 60 Minutes, that the U.S. was on an unsustainable fiscal path. In other words, we're, as he says, borrowing from future generations. We're the U.S. spending way too much, going into more and more debt. That's not good for the value of the U.S. dollar. That's why I say the dollar's dead. What can we do? Let's look at alternative investments. Okay, so if we look at, and I like to look at this particular site, gold, silver, and different cryptocurrencies, those are alternatives to dollars. Many more cryptocurrencies than just these, but here are the top two in terms of market cap, Bitcoin and Ethereum. That's what I like to focus on. So last week, gold was around 2044. Now it's 2001. So it went down. Silver was around 2241. Now it's 53. So it's gone about the same. So that's why I talk about dollar cost averaging. So I bought gold this week cheaper than I bought gold last week. That's great. But now we go down, we look at Bitcoin and Ethereum. Bitcoin's at 51,500. Last week it was at 43,000. That's right. Just a week ago, 43,000. What's that? At least a 25% change there in just a week. Ethereum's at 2752, and last week it was 2409. So you can see where things like dollar cost averaging come into play. Some items you might be buying cheaper on a week-to-week basis. Some you might be paying a little more. But these may come down, and next week it may be different. They could go up, they could keep going down. But if you're dollar cost averaging, you're trying to get a good average price on these assets. And two, you're diversifying. So instead of just holding cash, you're also holding gold, silver, and some cryptocurrency. And you can move in and out of them pretty frictionless, meaning you can go on the market 24 hours a day, sell that Bitcoin and turn it into cash or any other cryptocurrency. Gold and silver, depending upon how you do it, with a spot ETF, or I do it with not only a spot ETF, but I also use a service called Vaulted, where I can buy and sell my gold and silver as well. I also look at, on a month-to-month, the 10-year Treasury note. You can also obviously put your cash into things like CDs or Treasury notes, bills, bonds. 4.26%. Last week it was 4.1. Why does that matter? A lot of things are tied to, or at least will mimic, the 10-year Treasury, particularly mortgage rates. And sure enough, mortgage rates ticked up, just like the 10-year Treasury note ticked up. So there you have it. Thanks for watching.